it's easy to raise money, especially if you have a compelling return.
There's a million issues that happen in that making it look perfect.
Is it you have to get 2 years down the line? Is it like each phase you're assuming?
It's construction. Nothing ever goes as planned.
So for the first 18 months on average, we're at a big negative deficit.
After the 21 months, like where does the profit usually get created?
He thinks once you find the land, everything else figures itself out.
If you're trying to just squeeze dollars and look for the highest return, that's probably not. We're building lots of businesses. We're obviously this country, largest transfers of wealth. Baby boomers just coming of age. And you buy a business and you have.
Welcome back to the KB podcast. My name is Kylie Brown. I have a few of my colleagues on here with me. I got Mr. Daniel Patrick, hailing out of, where are you from? Hillsboro, Missouri?
Yeah.
And Andrew Clement. Where are you from, Andrew?
Ridgefield, Connecticut.
Okay. And where do you live currently?
In Ridgefield. I guess.
Okay.
Didn't make it far. He didn't make it far.
Well, last week, guys, we had a great podcast. It was really good. We were going over basically how we generate money. I think we got a great response from that and learned a lot of things on that end. So this week, we're going a little bit more in depth on that. Bring my notes back up. But basically, setting the framework of how investors really think. And I don't know why my brain's going blank, but what is our thing today?
So due diligence and like how is the money used?
Exactly.
Because that's a question we get all the time. Because I think we've all heard so many horror stories, as much as I hate even using that word when it comes to investments. But I think the reason they're so prevalent is because it's easy to raise money, especially if you have a compelling return, right? I've seen 2-3x multipliers, IRR of 40+%. I mean, Warren Claff, which for those of you guys who doesn't know, he's a very prolific fundraiser for companies. He's got an offering that I'm seeing all over Facebook right now. And so it's easy to look pretty. It's easy to have these offers, but what it comes down to is the people driving the machine. Like, are they able to take that money and actually turn a profit? And I think that's why these unsavory stories that we hear about are so prevalent, is because they raise the money and then they can't turn a profit quick enough, and then they end up robbing Peter to pay Paul. We all know the stories there. So I think that's really what we want to tackle today, and kind of substantiate what I just said, and so you guys have a better understanding of what to look for, but also a little bit of an insight on how we manage money as a sponsor of our deals as well.
Yep. So basically just going over how the investors, and apologize, had a brain fart there for a minute, but how, the investors actually get paid and what has to go right, because there's a lot of moving parts. We actually have this inside joke here at our office. One of our guys, he thinks he just brings the land, and we found the land, everything else will figure itself out. That's far from the truth. So we're going to make a t-shirt that says that, because that's his mindset. He thinks once you find the land, everything else figures itself out. Yeah. Far from being true, but going to go over how the investors actually get paid and what has to go right to the process. You guys are very, very familiar with what, how this process works. I'm sure you guys get hammered on a weekly basis of, these type of questions. So what are you guys currently running into, and what are you seeing currently in the market that you're receiving from these investors?
For me, a lot of people, I can kind of put them in two different buckets. I've got a lot of people that I talk to who know exactly what their due diligence process looks like, and they've perfected it just because they've been through the ebbs and flows of investing in construction, be it land development, fix and flips, multifamily value syndications, mostly. And so they know what to look for because they've already made the mistakes. Unfortunately, some people have to learn from very costly mistakes. So there's those people. And then there's also the people that have no idea how to do diligence, how to do their DD. Some of them, they play whack-a-mole thinking they're asking the questions they should ask, and they overlook the ones that they don't. But I think the biggest common denominator, whether they know what to look for or not, is like, where's their money actually going? Because they watch a lot of videos, they're reading all of these explanations, they're out here Googling names, they're looking on the Better Business Bureau and Trustpilot and a lot of these, centralized review networks where, you could be a terrorist organization and have an A+ rating, right? So
you talking about the BBB?
Yeah, absolutely.
We can fabricate all that stuff. So yeah,
absolutely. And that's what I tell people. It's just like, that's not where you want to be looking, unless you're trying to buy cupcakes or flowers, that would be good, but not investing. And so, I mean, we've got some people that like to dig through spreadsheets, but I guess for you, Kylie, I think I want to ask you, like, based on what you know, what should investors really be trying to understand before they invest? Like, what should be their top priority to understand before they decide to move forward on something?
Well, this is my opinion, in my opinion only. I think you got to know who is. It doesn't matter about the company name, doesn't matter about anything else. Who's the people behind that company? What have they done in the past? What are they currently doing? What do their morals look like? It's the same thing, I hate to compare it to marriage, but it's just like marriage, like if you're getting married to someone, you want to know a lot of the details with them, spend some time with them, get to know who they are. What are their beliefs? Do those follow your beliefs? And make sure you're investing with the right person. Like I personally believe that's first and foremost. Like company could have amazing track record and a person could have amazing track record or for believed to be amazing track record. But when you start doing a little bit of digging, you find a completely different story. So
Yeah.
and that's why we personally invite pretty much anybody. I think you guys do it all the time. I met 2 investors this week, invite them out to the office, so they get to know me personally.
Yep. Yep. Matter of fact, we had a gentleman come in yesterday and the day before, and I think, look, not everybody's due diligence process is the same. I always tell people, that are exploring our deals that I'm comfortable with whatever level of scrutiny they want to do. That's really what I'm here for. I certainly don't expect anybody to invest anything that they're not excited about, let alone fully understand. So some of our people, they want to fly out, they want to tour the projects, they want to meet Kylie, they want to meet me. But not a lot of people have that level of freedom over the location. And so they're limited to talking to us and just, trying to think of what questions they want to ask. And I think that's really something that I want to spearhead moving forward in 2026, because a lot of people are waking up to who we are as a brand. And with, these new people, I would love to just kind of help them pave the way for a really solid due diligence process. Because, we try to maintain as much transparency as possible, but there's so many questions to ask.
No, I was gonna say usually you guys, are obviously asking me most of the questions, but it's on
Mhm.
the development side. So you guys speak with investors on a daily basis, so like what are the main questions that come up? Like I know I'm reversing this a little bit, putting it on you guys, but
Sure.
like what do you guys see that they're mainly asking? What are the things that they're focused on? Because you guys got to remember there's the left brain and right brain people, and some people are very detail oriented.
Mhm.
I'd say that's not really me. I'm a bigger
Yeah.
picture kind of guy, but give me a rundown on the differences and what those people ask, and then we can dive into that a little bit more.
Yeah, so I'll jump in. I'll jump in here just to kind of get cracking on this. But I think at a high level, a lot of what my people are asking is what physically has to happen in the real world in these projects, et cetera, for investor capital to really turn into that return that they're receiving.
Great question. Yeah. So during the process, what has to happen? So first off, and we went over this a little bit in last week's podcast, which was a great podcast. But we don't utilize their money most time right off the bat. It is set aside, but it's set aside usually for a certain project. Now, even though they're part of the whole fund, I don't just put it in a bunch of different bank accounts. We set up different bank accounts for each development, and that money set aside. They're part of the bigger fund, so they're covered by all the projects, but their money will sit in, let's say, the Overlook or Hillcrest or whatever project it is, and that money's just deployed there. It might take 6 months, so I might be paying them out 6 months worth of interest before we end up closing on that project. That's not usually typical. Usually it's closer to 3, but there are certain projects that we need to raise quite a bit more for, so a portion of those funds might just sit there for a little bit before anything's deployed. Now, jumping more into your question, Andrew, you said, what needs to be done for them to actually make money off their, investment. There's a plethora of things. So like what I was just joking about on the land side, like, hey, I found the land. Well, that really means nothing. I think I said this to you yesterday, Daniel. That really means nothing. Like, I don't mean that it means absolutely nothing. It's super important. You want to find very high-end areas that are in 5-star school districts. That's what we look for. So it depends on what you're building. We're building homes. You want to make sure they're in specific locations. But once you find the land, you're still looking at anywhere between 3 months to 24 months, depends on the jurisdiction, before you have that thing entitled. And at that point, you still haven't made a dollar, haven't made any money. I've just spent probably another $500,000. Well, on average, I think I told you guys we're spending about $300,000 in entitlements. That's your engineers and everything. So all we've done is spent more money and spent a lot more time. So that extra, let's call it on average 12 months, that's just us spending money. Now we get to the actual spending even more money, and we bring in the horizontal development teams. And when they get started, you're talking about millions of dollars to put in all the infrastructure. You put in roads, water, utilities, sewer, landscaping, anything to make it a subdivision, all the amenities. So at that point, all we've done is spent more money. So for the first 18 months on average, we're at a big negative deficit. So you got lenders' money out and you got investors' money out. Now at 18 months, give or take, that's where we start bringing in money, or start selling off lots. But most of the builders, they have up to 90 days. So technically, you're talking about, somewhere around 21 months before we really can make money on a project. So you got that whole time frame, and all of that is built into, our projects are all built in our pro forma, but it takes approximately 21 months for the average project before we receive a dime. So think about that, 21 months. That's quite,
Yeah.
wrong. Some projects go a lot quicker, but that's average.
Piggyback off that, like after the 21 months, like where does the profit usually get created in each development process? I mean, through the phases, you need to get into a certain amount of phases. Is each phase kind of a chunk of that's profit? If that makes sense. Like how does that work? Is it immediate? How do all the numbers kind of shake out?
No, great question. So, for example, let's go with Serenity Woods over in Wright City. That's 127 homes or 127 lots that we developed. We sold it to Fisher Homes. So on that project, it's phased out in 3 different phases. The reason for that is so we keep our overhead low. So when we're building out phase 1, yeah, some of the items have to be ran all the way through phase 3, which on that one, I think we only had to run sewer all the way over to phase 3 because that's where the lift station is. But on phase 1, we basically only have to finish phase 1. Phase 2 and 3, we don't really have to spend much money on. So we keep our overhead quite a bit lower. And at that point, what was your main question on there? I apologize.
Yeah, I mean, I guess where does the profit come into play? Like, is it you have to get 2 years down the line? Or is it like each phase you're assuming X amount for debt, X amount for investors, X amount for profit? Like, or are you trying to get to a certain stage in each, and basically then how do those kind of compile up within themselves to, distinguish how the investor payments are coming through?
You can run that a few different ways. So people like Grant Cardone, he makes his money up front. We don't do that. We make our money at the end. So we don't need the money, really to come in right off the bat. As long as we're breaking even, I'm good with that. So right around the 18-month marker, after we've started selling lots, that's about our break even point. And so that's once we start selling lots. So that pays off all of the investors, and it's paid off all the lenders. So, and I'm talking about just Serenity Woods in that example, which is about a 3-year project. 18 months, you're profitable. Now, you could have took profits all the way throughout that process. So if the average lot is 60,000 that we're selling, 20, 30% of that you could take as profit if you wanted to. I don't really believe in that all the way because I'd rather pay back, the lender a little bit quicker and keep our overhead a little bit lower and us take our profits later on in the process. Not saying you have to do it that way, but it's just the way that I personally have done it, and it's worked great for me personally.
And with a preferred return, which is what we pay, like what that means is, if there's bank interest involved, they have first position, as so goes real estate, right? But a preferred return is actually when the investors get paid before we take profits as a company. Are there people that offer returns like after the companies take profits?
Yeah, there's a lot of them. Actually, most of them do it that way. But that's most funds, though. We set it up completely different, though, because I've told you guys this. My 2 things that I really focus in on, which I won't go over them again, but there are 2 things that I run the company by, and they're very important to me. But you always put the investor's money before yours, always. So if I have a personal risk, like a personal guarantee on the lender, I still always put the investor's money before ours. So I think that's key and it's important. And I don't know, it's just my morals and my values of how I think business should be ran. If you always pay them back, they're always going to come back and want to invest with you. So that's super important.
And I think, one of the questions that I have written down here is, what should investors focus on instead? How much or how often they're paid? Because, as I said at the beginning of the podcast, it's easy to raise money. It's easy to advertise, really compelling returns. But if you're trying to just squeeze dollars and look for the highest return, that's probably not the best way to do it, because you got to look at the moving parts. You got to look at the operator running the company. And Kylie, I know you said you weren't going to mention the other things, but I think it does have a lot of merit for you to mention those things that you're thinking of. I'd love to hear it, because I think it really comes down to you, and just business is one thing, but a lot of operators can crumble because of what's happening in their personal life. They could have a crazy life ambush. They could have a loss. They could have a divorce. They could get sued. What are some of the things that you subscribe to in your personal life that help you stay grounded?
Well, I think you know this a little bit, but Jehovah Jireh is my first and foremost, God Almighty, Elohim, whatever you want to call him. Jesus is first in my life. So that's first and foremost. So without him, I don't have nothing, honestly. I leave everything to him. That's my personal belief. And secondly, it's just because I lived in Windermere, Florida for about 12 years, which is just right there on the west side of Orlando. I loved Disney. And don't get me wrong, I don't love their CEO, but I love their Disney World customer service. Like, it was just always amazing. Didn't matter what you needed. They always went above and beyond. Like, if you're gluten intolerant or couldn't have sugar or couldn't have grains, any place you went, they went above and beyond to make sure you're satisfied, which I believe that is super important when running a company, and especially for what we do on building lots and building homes. It's super important. You want to make sure that that's a home, not just a house, which I went over that before. And you want it to make it, anybody that buys that spends that kind of money, because that's most people's biggest investment. You want to make sure it feels, amazing to them. So go above
Yeah.
and beyond.
Absolutely. And I think, like I was watching something that I saw on YouTube the other day, Alex Hormozy.
Yeah.
I think he met with Jake Paul or one of the Paul brothers, and one of the Paul brothers said in a podcast, like they learned this from Hormozy. Above all else, always try to exceed expectations. Like whether you're setting goals, be it company, personal life. If you set a goal that far exceeds what's expected, even if you come up short, you're still able to over deliver. And I think that's one of the reasons that I think you've been so successful, and also hiring people and just firing yourself from things that you aren't intimately seasoned with, or just simply aren't worth your time because you've got a company to run. And just kind of going back to what investors should be looking at on top of just the returns alone. And I think another thing that people look at, and I get questions about this all the time, is a lot of other people, they'll invest in things that offer monthly payments, right? And I know we pay quarterly. I'm curious, and I have this question written down, Kylie. Like, why do we decide to pay quarterly as opposed to monthly payouts? Because I know it takes in order to make a return, you've got to be able to use that money. But what's the specific reason that we do quarterly and not monthly?
Well, I used to not do quarterly at all, but I realized most people, they not saying they get antsy, but I would say they get a little bit more antsy if they're not seeing some kind of return or some kind of development going on with it. And we have the financials to do so. I mean, we're in a solid position. I like that kind of setup. And when people see things moving forward, they usually are a lot more apt to either invest in more with you, or being more friendly and staying on board with you. So that's what you're looking for. And all of my investors, we have numerous testimonials. That's what they loved when we switched over to that quarterly distribution. They see active stuff going on, even if you aren't giving them, which I usually do. You guys know this. I'm really good about it. But I'll go out to the site and give them actual update. Like, here's what's going on with the site, which has been a little bit slow, but it's wintertime here in Missouri. We'll have quite a bit moving in the next, I would assume, 30 days. But I think it's super important for people to always see what's going on and be part of it, actually, versus me just doing a monthly update, actually taking them to the site, showing them what's going on, them seeing the progress. I personally like that. So, and you guys, I think you asked this a little bit ago, or maybe mentioned something on it. The ways that, and you guys could jump into this a little bit more, but the ways that these sites make money, there's like, I don't know how many ways, but 3 I could think of off the top of my head that a site makes money. You got the entitlement process, which increases the value tremendously. You can make 6, 7 figures. We talked about that in the past. Then you have the horizontal construction. If you add that in, that adds quite a bit more value, where you can sell those lots off. And then you have the vertical part where you could actually build the homes. Those are just the first 3 off the top of my head. There are other ways of wholesaling, but I'm not a wholesaler. I'm not looking to do that. They do look at the entitlement process and selling that off as a wholesale. But when you're making, 6 to 7 figures, it's not really much of a wholesale, in my opinion.
Right. And, going back to what you just said about the entitlement process inherently increasing the value of the land, just as an example, and I may have mentioned this on another podcast, I think we had a $1.6 million acquisition. And by the time it was entitled, it was appraised at somewhere around 4 million or something like that. Kylie, I mean, you could easily, without even breaking ground, you could have sold that property for multiple 7 figures over what you paid. But, despite being able to make that kind of profit upstream, there's still a lot more action to be had by actually doing the development. And
sometimes, and I'm not going to say always, sometimes.
Sure. And yeah, and speaking of sometimes and not always, I mean, it is construction.
Yeah.
Nothing ever always goes exactly as planned. And I think that kind of leads well into another question is, when things don't go perfectly, usually it comes down to timing. So, when there is a delay, which I know there's delays and there's issues all the time, it's construction.
Yep.
But when it is a timing issue and things slow down, like what is that usually, what is the reason that usually happens when things don't happen on the exact day and time they're expected to happen.
What are the consequences of that?
Well, I guess what are the reasons why? I mean, obviously entitlements can take a long time, but even after entitlements happen, after we acquire the land, it's impossible to analyze every last grain of sand on, every last acre of a project. Like, what are some things that can pop up even after the entitlement process and closing that can hold up a project?
There's hundreds of things that could pop up. Honestly, here in Missouri, one of the bigger things is rock. Usually you already did all your borings, but that's something that could pop up, and it's usually pretty well estimated. And with technology, all that's getting, not a big fan of certain technology, but it's getting better and better, and it's easier to guesstimate and almost be spot on with your numbers, even on the rock. I think that's first and foremost. And secondly, I think the biggest thing is finding the right people. I've said this 5 million times. If you're not working with the right companies, even if you spend quite a bit more, that time eats into your profits big time. So if you don't have the right horizontal construction company, which when I say that usually means they're handling the grading, tree removal, roads, all the water that flows, sanitary systems, maybe electric. There are certain companies that do everything from A to Z, but vast majority of them don't. But you want to find the right company. That's first and foremost, definitely top of my priority list.
Yeah, and if I can just kind of jump in on this, just to like take it one step further. I mean, because obviously there's a lot of pro formas that are being done. There's a lot of evaluating being done, obviously, on spreadsheets. So what do you find is the biggest difference between the spreadsheet timelines and the real life timelines?
Actual time difference?
Yeah, or just like if it's miscalculated, maybe, what are the typical factors that can, delay something, or maybe something happens faster than anticipated? Just like you're obviously doing everything you can to
Yep.
analyze it effectively in advance, but like how does that shake out in comparison to what actually happens?
Well, so it depends if you're including or excluding entitlements. So that's a wide open door. Entitlements, there could be so many delays there. Now, if you're excluding entitlements, the usual thing is that, again, it falls back to the people you're working with. So if you're not working with solid companies that have, this process down pat, they've been doing it for 20, 30, 40, 50 years, you're going to run into delays. That's all there is to it. They're newer to the industry. You might do it cheaper. If that cost you 2, 3, 4 months, that delay could definitely outweigh, on cost wise, what it's worth, hands down. Especially people that have homes under contract. I've had this happen before. Someone had a home under contract with us, but there was enormous amount of delays due to our contractor, due to the city. And it was just one thing after another, which they stayed on board with us, but that stuff happens and you got to try to avoid that. But again, it goes back to working with, in my opinion, the best of the best. I'm not saying that they're just the best at their job. I could go shake, John Bear's hand, not have an agreement in place, and he'll do exactly what we agree on. Same with Kolb, Kolb grading. Great people. They're great people to work with.
Is a delay an automatic red flag?
It depends. So what do you mean by red flag? Red flag on what?
Just is it always a bad thing? It's easy to assume that delay is not good, which I'm sure it's not. But like,
Yeah,
it's
95% of the time it's bad, but it's not horrific. Just depends on what the delay is for. Most time it's not a great thing, honestly. It just usually increases your cost slightly. And when you're running off certain profit margins, depends if it's horizontal, vertical, what it is, you're cutting into your margins.
And I think, delays, when you say it's a bad thing, obviously having a delay or having something not go as planned, it's never a positive, but it's also something that has been built into everything along the way. That's why I think it's so important to stress test things and do sensitivity analysis. And I think your agreements with the land seller, Kylie, before you even close, those agreements give you a lot of leeway and give you the time you need to do as much of that due diligence upstream as you possibly can, so that by the time you do employ investor capital, most of that is knocked out. But as you said, still, even after closings, there's a lot of things that don't go as planned. And Andrew, to your question, like, is it always a bad thing? Like, yeah, but the question is like, is it a cause for panic? Usually not, right? It's never something that we want, but it's certainly not a cause to panic. People that invest in real estate, if they don't already understand, it's so important to know that it's construction. Nothing ever goes as planned. Like, people have personal lives. There's just all sorts of things that can happen. with companies and this and that. But I think going back to what you were saying, Kylie, just the example that you gave with Barrett Construction, even if you didn't have a signed contract, a handshake goes miles, just because it really just comes down to communication and trust of your people, and also with your investors. Like when we were talking about like the frequency in which people get paid, when they see money coming back, it signals to them that things are working. But on top of that, I think communication is so important with investors, because they don't have control over anything. And I guess a question for you I have, Kylie, is this: like, I know on your investor meetings that you have every month, from what I've heard, people really, really appreciate the level of transparency, because you share the good, you also share the bad. I mean, can you speak to how people react to when you say there's a delay? Like, do they respond well to that? Do they panic? Do they appreciate it? I mean, what comes up on these meetings?
It's the same thing you guys run into a lot, though. It's people always thinking that everything's just perfect. Like, like, well, how do you guys do this? It seems so perfect. I wish it was that easy. There's a million issues that happen in that making it look perfect, I guess. And I'm not even trying to make anything look perfect. There's plenty of flaws that go through the process. But again, we'll keep hammering away on this. But without the right team in place, and that includes you guys, none of that's possible. Like, me to be able to do all this stuff by myself, it's just not possible. You want the best of the best on your team.
If you don't mind me jumping in, I think something really important to note as we talk about all of this is how you create your projections, because I think that you really, do a lot of your pro formas and forecasting around worst case scenario, not best case scenario. So if you can kind of walk people through what that looks like, because to me, and I mean, I've seen it firsthand, you're creating a buffer in which basically the worst case scenario things can happen. So, if it goes according to plan, you're still much better off. And even if things do have some delays, et cetera, you're still hitting that, projected goal. So if you could kind of walk people through that and what your thought process on all that is, I think it'd be really helpful.
Yeah, absolutely. So I think, on one of these podcasts, though, we should go through like how that whole pro forma works and how that's set up, because I think that's, I like that math side of it. I know people don't love math. I actually enjoy math. My kids, for some reason, don't love math, but whatever. I help them out with math at 9:30, 10 o'clock at night for some reason always. But back to that performa and how that runs. I have it so basic, and I think you've both seen my performas. I don't have them real advanced. They're not really scaled out, which we have some really ones that are very complicated that have all kinds of other numbers in it, but I'm looking for basics. I'm looking for what my cost is and what that's looking like. When I run a pro forma, you have your basic information that you run by. So first off, where are you located at? Let's say it's a Missouri project. What is our average cost in that region? So if it's in St. Louis, we know our average is probably right around $2,400 a front foot. And that can change a lot. Don't get me wrong. We could be down to $1,200 a front foot, which is half the price. But we run certain numbers based on our front footage. So we put in the land cost. We know, if there's any acquisition fees. Then we run our horizontal cost, and then we get a little bit more in depth. So when we're running that pro forma, I'll get it over to someone that's, doing this type of work like Barra or Kolb or Howland Sons, and we'll start getting good estimates in place. They're not rock solid. They're usually within 5% though of where our costs are going to lay out before we even have any approvals from the city or any approvals from any of the jurisdictions. So we usually have that in place, I would say within the first, 30 to 60 days. Now, does that change? Yeah. So like Lewis Road project, we thought we were going to be able to tap in about a half mile down the road to some of the sewer. That's not the case. So we're tapping in almost 2 miles down the road. So that cost went from like $980,000 just on the sewer to 1.56. A little bit of a difference there. That's something we weren't expecting. So when we sell those lots, we got to either try to, one, get more lots, or two, make those lots more valuable. So there's some things that go into that. But you look at it and then you're like, okay, our lot price is $250,000. What is the surrounding area selling for? We know we could easily sell for that. This is what we have into it. Let's call it 180,000. We sell them for 250 or whatever the number is. We might be selling it for 300 or plus. Depends on what we're trying to hit profit margin. Most time at BluOnx, we're sitting somewhere around 35% on the horizontal side.
And that's phenomenal in my opinion, just based on what I've seen and what I've explored.
Yep.
And I know we're coming up on time here, gentlemen, and just kind of as for closing thoughts, one of the things that comes up for me, just looking at you, listening to you speak, Kylie, and also like seeing firsthand all of the things, all of the moving parts, all of the levers that you've got to pull and buttons you've got to push. There's a mindset that's required to do that. And I was actually talking to you in your office the other day. I got a little bit nervous because I had a bunch of meetings things coming up. Had some very high level people coming to town to meet us, and I had to steal a little bit of your sunshine. And what you told me in your office is it just really comes down to mindset. And it's kind of interesting because like I've always been fascinated by what makes someone a really great operator slash business owner versus someone that crumbles under pressure. And there's some science that actually points to a gene. I don't know if you guys ever heard of the warrior gene. It's like genetic markers that dictate how well someone handles stress, whether that's true or not. I think it just comes down to that mindset. So for you, Kylie, like, what comes top of mind for you when someone asks, like, how do you handle all of this just mental baggage? Like, what sort of mindset do you have to adopt to be able to lay your head in bed at night and be able to sleep peacefully after running a company all day and helping your kids do their math at 9 o'clock at night?
Well, I used to said, let's call this 10 years ago, that I'm just awesome. But anymore, I know that's not true. I think I'm pretty good, pretty cool. But realistically, God Almighty, I keep saying that, but leave it to the Lord on almost everything that we're doing. So like, I don't feel stressed with most of the stuff that we're doing. And don't get me wrong, like you guys see me this morning, a little bit stressed because I'm dealing with, numerous attorneys and stuff like that on all kinds of issues. And the tech support's on here. He's going to ask me about that anyway. It's just like, you have these issues that you keep running into. You're like, okay, these are annoying, but I believe wholeheartedly, I know where we're headed. I know what's going to happen, but it's because I leave it to him. And sometimes I hate, referring back to that, but that's where my beliefs are. So if you hear me mention Jesus, that's what has changed my whole life. Like honestly, leaving everything to him. So even when you were talking to me on mindset, or the other day when you came in here, mindset is everything. Like it is everything. I don't remember what the quote is or whoever said it, but if you believe you can, you can. If you believe you can't, you can't. I say that to my kids all the time. I know 100% sure where we're headed. I have not one doubt in my brain. If you doubt yourself, and don't get me wrong, you could have some doubts, but I don't doubt it one bit. We have great people around us, and it just seems to keep accumulating wonderful people like Daniel, Andrew, Steve, Scott, Kurt Kostecki, Joe Carson, all these great people that we're accumulating. Not saying I have anything to do with it, but it does become contagious being around people that are positive and know where they're headed in life. So mindset is everything in my mind. Sorry, Andrew, you were saying something.
Yeah, I think that was Mr. Henry Ford that said that quote.
Yeah, whether you believe you can or can't, you're probably right.
Yep, absolutely. I love that. Well, I have read Think and Grow Rich probably 300 plus times. So probably because they talk about Henry Ford quite a bit. It's probably where I got it from.
Absolutely.
Well, also, guys, that used to be on my resume as my favorite quote when I was coming to college because I thought it was cool, but I also believe in it. So,
Yeah, no, and I talk to my whole family about that all the time, guys. Like mindset is just everything to me personally. But we're going to wrap up, guys. Do you guys have any last comments or anything you want to mention before we wrap for the day?
I'm good. I got to jump.
Awesome. Andrew? Yep. All right. Well, thank you, everyone, for attending, and God bless. We look forward to chatting with you guys next week. Have a great week.
See ya.
See you guys.